Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is January 4th, 2019. Trying to get used to saying 19, people. Give a shout out to my man, Mr. 9, for that song request, Liquid Source by Jizza. Shout out to my Wu-Tang people out there. Classic joint right here. What's good, people? Hope you guys are doing all right today, Friday, end of the week. Today, we're going to be going over this tentative code that upgrade to the Ethereum blockchain that developers were talking about in a recent meeting. This code is going to eliminate ASIC mining. So we'll take a look at that. If you guys aren't familiar with that, I'll kind of explain it. If this article doesn't, I'll give you guys some backdrop on that whole process, ASIC versus GPUs and whatnot. And then the second article today I'm covering is really purely idiotic to me. Overstock to pay taxes with Bitcoin. BitcoinNews.com is saying this is a sign of adoption. I think this is a sign of retardedness, honestly, or just a PR move by Overstock, because it just does not make any sense for you to pay taxes with something so valuable and rare. Man, we got to help these people. But first, we're going to take a look at that market cap. We are currently at 129 billion, slowly coming back a little bit there, people. And really what's concerning is if I could draw an imaginary line, trend line on the market cap all the way through, it would have broken at essentially where Bitcoin broke as well. We'll take a look at the chart in a minute, but it would have broken the trend line at $131 billion. Yeah, not looking too good as far as continuing our uptrend. At least the standing trend line back from December 27th has broken. So we'll have to see what happens. And as you can see here, this is what I'm talking about. This green trend line that I drew was broken. Was it yesterday? Yeah, yesterday. So a little concerning to me, but we'll have to see how this pans out. We actually were, I told you guys we were going back and forth with the trades, got tapped out twice on the short, but we got out right before we dropped on this move. We didn't go short, but we did get out of our long right here where that purple arrow is. So we did kind of save ourselves from another loss there, and so we'll just have to figure out which way the algo is going to go from here. But overall, as you guys can see at the bottom here, and you can see this on TradingView as well, if you go to cryptoblood.io and you click that red button there, view real-time results, now you'll be able to see, if you scroll down, you'll be able to see this performance chart of the algo. And it's doing well. And I'm actually almost done with the Ethereum algo as well. That one's even more profitable, almost 3.0 profitability for the Ethereum algo, though it does make a little less money percentage-wise than the Bitcoin algo. I think Ethereum algo is running around 200% year if you track it for a whole year. But the drawdown is lower, so that's what makes the profit factor higher. The drawdown on the Ethereum algo is like 7%. So you're giving up a potential of 7%, or at least you did. You gave up 7% drawdown for a return of 200%. With Bitcoin this past year, the max drawdown we had was 14% for a profit of 309%. That's very good profit factor there, profit ratio there. So that means if you were willing to lose 30% of your money, you could gain about 600% of your money. Now, this is hindsight, but that just kind of lets you know the performance of the algo from that perspective. But yeah, I'll keep an eye out on it. But that was a very bearish move, just as this was a bullish move, seeing us go above it. So we're kind of going back and forth. As you can see, we dropped below here, went up, drop below, and each time we cross this area, these are highly volatile time periods. As you can see, a lot of price movement, price action when we continue to cross this trend line. So we'll just have to see what happens. But let's take a look at that first article out of CoinDesk, and it says here, Ethereum developers give tentative green light to ASIC blocking code. It says members of Ethereum's open source development community tentatively agreed Friday to implement a new algorithm that will block specialized mining hardware, or ASICs, pending further testing on the proposed code. If accepted by the network of users that run the Ethereum software, the code change, dubbed ProgPile, would block ASICs such as those made by major mining firms like Bitmain. In its place, the new software would allow general purpose, or GPU hardware, which is typically phased out by ASICs, to compete with rewards on the platform. ASICs were developed for Ethereum as early as April of 2018. Speaking in the developer call today, security lead Martin Holst said that he prefers the switch as it will help ensure the safety of Ethereum's eventual transition to proof of stake, a new system in which users mine the cryptocurrency not by burning electricity, but by setting aside coins they hold. You know, to me, and I'm just going to pause for a second, proof of stake actually causes more centralization of power because, of course, quite naturally, those who have more coins will have a bigger vote and stake in the overall blockchain. So I don't know. That's why I like delegated proof of stake created by Dan Lammer, because it even eliminates the ability, because you can't throw out anyone who holds huge stakes of a particular coin in a proof of stake system. The vote is with the coin, but with delegated proof of stake, the voting, there's 21, or usually a council, the number varies, but with EOS it's 21. I think on the Steam blockchain it was less, but the council produces the blocks, but those council seats can change at any point, every 2 minutes, with delegated proof of stake. So, you know, that's, I think, the downfall of just a straight proof of stake system. However, that's where Ethereum is heading, and it's better than proof of work, in my opinion. So hey, we'll see what happens with that. Host said, "We know today that Ethereum has flaws which are currently being targeted, so that's why I would like to switch as soon as possible to give us time to move to proof of stake." Concluding the conversation, Ethereum Foundation Communications Officer Hudson Jamieson appeared to categorize consensus as having been achieved on the proposal. He said, "Sounds like we have come to an agreement that we are tentatively going ahead with ProgPile, which means we are going ahead unless there is a major problem found with the testing of things of that nature." So that's what he says about that. This means that unless developers encounter unexpected issues with the change, ProgPile will be released as part of a standalone system-wide upgrade or hard fork within the next 2 to 4 months. Aside from ProgPile, no other software changes will be included in the upgrade, developers said. The news comes at a time when Constantinople, the platform's 5th major upgrade, is nearing activation. Speaking on the call, Parity Release Manager Offrey Shoden said that according to current block times, the new upgrade is due to activate 10 minutes after 1200 UTC on Wednesday, January 16th. Constantinople brings a host of design changes aimed at streamlining the platform's code. It also seeks to delay the so-called difficulty bomb, a code fix designed to prompt frequent upgrades, for 18 months while reducing the Ether mining reward from 3 ETH to 2 ETH per block. Developers also said that a further hard fork dubbed Istanbul should be planned to occur in October after a period of 9 months. This will be part of a periodic upgrade cycle intended to maintain the regularity of upgrades. Still, the timing of ProgPile, which will deviate from the periodic upgrade cycle, is still unclear. So there you have it. Again, you know, I guess this, you know, the whole thing, I remember when ASICs really hit script algos or script coins, which back then when I was mining, that was a big deal to see, because Litecoin was always touting, you know, we're ASIC resistant or ASIC proof, and you can't do ASICs on script algos like Litecoin. But then they hit, and it messed the whole game up for us who had invested a lot of money in GPU mining. We had to throw all that out. I mean, it became useless. So with ASICs, there are pros and cons, but you know, I guess one of the cons is that the person that creates, the manufacturer that creates the ASICs, kind of start to have a stronghold or have cornered the market when it comes to those types of circuits. But at the end of the day, it does create a higher security because you're able to get more hashing power out of less usage of power output. It does incentivize people to mine with ASICs. It really doesn't matter with Ethereum because they're moving to proof of stake, so mining will be obsolete soon. But I wonder how that is going to look like. What does that transition look like? In my opinion, all it's going to do is all the big mining pools that have all this ETH are just simply going to stake a lot of it and become the same players that control most of the market or most of the voting power on Ethereum. So we'll have to see. You guys let me know your thoughts about that, but I just thought it was interesting that they are going to do this ASIC blocking code shortly after the upgrade, the major upgrade that we're going to have this month in about 10 days or so, 12 days here. So you guys let me know your thoughts about that. This one though, guys, live Bitcoin news, signs of adoption, Overstock to pay taxes with Bitcoin. This is so just sad. It doesn't make any sense. I swear this has to be just a PR stunt, a ploy to grab attention from the audience by Overstock. Major internet retailer Overstock is set to become the first large US-based corporation to pay its state business tax in Ohio using Bitcoin. It says here, popular internet retailer announced Thursday that it intends to pay a part. Okay, that makes a little bit more sense. It makes me feel even more so that this is a PR move. It says it intends to pay a part of its commercial activity taxes in Ohio during February using Bitcoin. Supposedly, the company will become the first major corporation to pay its taxes using digital currencies. The move comes a few months after Ohio becomes the first state to allow businesses to pay taxes using Bitcoin. Speaking on the matter was Patrick Byron, founder and CEO of Overstock. He noted, "We have long thought that thoughtful governmental adoption of emerging technologies such as cryptocurrencies, when accompanied by non-restrictive legislation over these technologies, is the best way to ensure the U.S. does not lose our place at the forefront of the ever-advancing global economy. We are proud to partner with forward-thinking governments and officials like Ohio and Treasury Mandel to help usher in a new era of trust through technology for our nation's essential financial system." It appears that there is a solid financial justification for using Bitcoin instead of cash for paying taxes. Let's see what that is. In an interview with Fortune, State Treasurer Josh Mandel revealed that those who opt to pay their taxes using a credit card are subject to a flat 2.5% service fee. On the other hand, Bitcoin users would only incur a 1% service fee, and it shouldn't even be a 1%, it should be 0% service fee. But dealing with governments, they always got to skim something off the top. Overstock, however, is in an even better position, as according to Mandel, early filers such as the company won't be subjected to a fee at all. Yeah, it shouldn't be a fee, period. In addition, Mandel salutes Overstock's move. He says, "We applaud Overstock for becoming the first national brand in America to register to pay taxes via cryptocurrencies. Their embrace of blockchain technology was ahead of its time, and we're proud to have them join OhioCrypto.com. This is, again, the most retarded thing I've heard of, guys. Why would you pay taxes with something that's valuable and rare and finite, right? Bitcoin is finite. It's only 21 million ever. So why would you pay taxes with that? That is just, it just makes no sense. I think this is a PR move. Nobody should pay taxes with Bitcoin or crypto. Primarily Bitcoin. I want to just talk specifically about Bitcoin because it's not something, it's not cash. It's just not cash. We need to stop thinking of it as cash. It is a digital asset. You would not pay your taxes with gold. So therefore, you should not pay your taxes with Bitcoin, which is even more finite than gold. So very stupid move, and just shows that a lot of this stuff in blockchain right now is still just posturing and PR stunts. Nothing that really makes sense here. Again, no reason for you to pay your taxes. Let's say they have liabilities of 10 million they're going to pay with Bitcoin. Well, in 10 years, that same Bitcoin, $10 million worth of Bitcoin, would be worth a whole heck of a lot more. A lot more. Maybe in the hundreds or even billions of dollars possibly. So again, there's no point in paying with it. Even if you pay with Bitcoin and then you go and buy it back, you just ended up in fees, probably still paying more than just paying it with fiat. That's what you should use. Useless fiat to pay for useless taxes. That's my 2 Satoshis for January 4th. 2019. Got to give a shout out to my man Mr. 9 for that song request again. Make sure you guys like, share, and subscribe. Click that bell, all that good stuff. But I'm out of here, people. Holla!
And here's the show and